Seriously, this market doesn't make sense anymore. I feel like I've said this so many times. I actually got tired of repeating it. But look at this. We're almost at all-time highs. I mean, look at the crazy recovery. As if what happened, I really don't think it's fair for the market to ignore what happened so quickly. I mean, the crash we just had, or the drop we just had, was way too big to be erased in 2 months. I think it deserves a little bit more respect, a little bit more attention. I don't think it's fair that we just recover so quickly as if nothing happened. A lot of people lost a lot of money during this crash. It's not fair that it doesn't take up more attention than this. Not a lot of people had the time to buy at these lows, so a lot of people missed out. And if we look at the Qs, I mean, it actually reached an all-time high today, 52-week high, 237.47, and the day's range is 237.47. So today it reached an all-time high. So forget everything that just happened. It actually surpassed February numbers, so just mind-boggling. So news really doesn't make sense. I don't really care about the news anymore. Just try to trade the numbers. Don't make assumptions. Just trade the numbers, really. So my total equity with Questrade is 94,077. Don't think I deserve this for sure because of the way the market is flying. I think it's going to teach us a lesson again or pull back, just because there's nothing justifying this rally really. And I actually had 3 put spreads closed today for 50% profit. So June 3rd, you could see this one got closed, this one got closed, this one got closed, and this one got closed. So this one here, June 24th, got closed today for 40 cents. And if we just go a little bit lower, you could see it right over here. It was open for 80 cents, May 26th. So open May 26th, closed June 3rd. So not even a week. And then we've got this one here that was closed as well, June 26th, closed today for 40 cents. So if we move a little bit lower, it's right over here. This one was open May 27th, closed June 3rd as well. Opened for 81 cents, closed it today for 40 cents. And then we've got this one here, June 29th. So June 29th is right over here. Opened for 75 cents, closed it today for 38 cents. So it was open on May 29th, closed 5 days later for 38 cents. So 3 put spreads got closed today at 50% profit. I didn't have to wait the full, these are 30-day put spreads. Of course, didn't have to wait the full 30 days because of this market that just keeps flying. Look at the SPY. I think it reached 313 today. Absolutely ridiculous. Wasn't it at 272 like less than 3 weeks ago? Yeah, so May 14, it reached 272 on May 14. What are we today? So yeah, about 3 weeks. It flew from 272 to 313. Just ridiculous. So it's a good thing for my put spreads because there are bullish strategies. So as long as the SPY keeps going up, that's good. But I have a feeling that when the SPY decides to drop hard, then my existing put spreads are going to be in trouble. So I've got 2 remaining put spreads right now. I've got the July 1st and the July 2nd put spread at a 288 strike, and the one I opened today for July 2nd expiration actually has a 295 strike. So that's pretty high for a put. So that means for this trade to win, the SPY needs to stay above 295 come July 2nd. So this one I think might be in trouble if the market pulls back on us. Now, if you remember my covered call on the Qs is at 236 now. And my short strike on the call option is 213. So that basically means my max selling price is 213. But my cost on this was 221. My purchase price was 221. My max selling is 213 and the stock is at 236. So you could see that I'm losing on this trade because I'm not able to sell it or take advantage of the 236 price because I sold a call option at 213. So that limits my upside. But I sold it for a premium. So I keep collecting premium while selling it. But because the Qs is just flying ridiculously, that's why I'm in this position. But all I could do is I'll keep rolling it forward. For example, if I try to roll this, I'll click create order, remove the shares, add a call, click sell. Now, I'd be buying the June 12th because that's the existing call option that I sold. I'd have to go further out, maybe let's say June 19. And let's see if I can move a strike higher. Probably not, but let's see what I can get at 214. So at 214, I would have to pay. So that means if I stick to 213 strike, I'll get a credit. But I don't want to stick to the same strike. I want a higher strike. So if I pick a 214 strike, I'm going to have to go more than 1 week away. So if I go to June 26th, it's still going to be for a debit. So that's really sad. If I go to June 30th, it's still a debit. Wow. If I go to July 2nd, break even. So no credit, no debit. So I'm going to have to go to July 10. Wow, that's scary. So I have to go to July 10 to collect the credit just to move 1 strike higher, while the Qs is trading at all-time highs at 237. But I'll keep doing that with the hope or the intention that the Qs drop eventually. At some point, it will drop. I don't think it's gonna keep flying every single week. I mean, usually the market moves gradually up, but it'll have days that it's up, days that it's down. The net result usually is an uptrend. But I mean, this is ridiculous. Every single day the market is up for no reason, really. And remember my covered call on IWM? I mean, last week I sold a covered call at 147, thinking that it's super safe. I mean, this IWM was trading at 136. When I sold the covered call at 147, IWM was at 36 on Friday, and you can see it today. I think it reached 146 today, so it's still safe. My covered call is still safe on IWM. So IWM is in a better position than the Qs because my covered call is not tested. I've got a 147 strike, but the stock is trading at 144.8, so it's trading lower than my strike. Plus my purchase price is only 151, so I'm not far either. So this is in a much better position. I'm not worried about it, but it's just ridiculous how fast the stock moves in one single week, from 136 to 146 in 3 days. Here, May 29, it reached 136 throughout the day, intraday, and today, June 3rd, I think it reached, you could see the high here, 146.07. So that's a 6.5% return in 3 or 4 days for an index. That's pretty fast. In my RESP account, I've got 6 shares of MasterCard, but this is something that I plan on holding for 15 years. So I just like to look at it, but I have no intention of selling it. But so it's showing a small profit of 187, so that's good. I've got my Dell covered call, so this is something that I wanted to keep forever and just sell covered calls on it as a way of producing income from it. But then after earnings, Dell flew to $49. So now I'm not in trouble. I bought the stock at 40. I'll have to sell it at 40 because my call option or my covered call is 40. But I collected a lot of premiums on the way. So I'm not in trouble if I sell my shares at 40 because I come out with a profit. Yes, I would have made more profit if I did not sell the covered call because I would be able to sell it at 49. But obviously I didn't know that would trade at 49. At least with the covered calls, it's more of a known return, but by buying and holding, it's more of a surprise element. But anyways, if I really want to keep the shares, I can actually just roll the call option forward. It might not be worth it. I won't be getting the same return as what I was getting before when I was selling the call options, but I could still do it if I want to keep the shares. And this is how I would do it. Like similar to the Qs, I would click create order, remove the shares from the order entry. I would add a call and then I would sell. And then I would look at the next expiration, which right now is July 17. I would pick the same strike for sure. And I would be able to collect a credit of 90 minus 30 divided by 2. So about 30 cents. I'd be able to collect a credit of 30 cents. But if I want, I can go further. I can go to October 16. And this way I can collect a credit of maybe $1.80. So that gives me a better credit. And annualized, it's probably around 12%. If I annualize this return, it gives me about 12%. So I mean 12% per year, it's not bad. And who knows, maybe Dell will drop back down. So in that case, I'm still in the trade. I still own the shares. And by the time it comes back down, I can continue selling call options at a better rate. Or I could just close the trade entirely. So if I wanted to close the trade entirely and get my money back, I can close it for somewhere close to $40, probably 39.85 if I don't wait till June 19. The closer I get to June 19, which is the expiration, the closer I can get to $40, getting out of the trade for $40, and then I could use the money towards something else, maybe some dividend stocks, maybe McDonald's. Would have to look at what is priced attractively, but I mean everything's flying right now, so there's nothing really well priced. This is my watch list of stocks that I would comfortably buy, and as you can see, they're all high. I mean, American Express, I bought it at 76, I think, for a covered call trade, and I closed it at the same price. Look where it is right now, 106. It would have been better off if I kept it. JP Morgan, was looking at it when it was trading in the 80s as well. McDonald's, was looking at it when it was in the 150s. I mean, IWM I own in my RSP. Coca-Cola, I guess Coca-Cola is not so bad. Facebook was at all-time highs last week, so really I don't see any opportunities for buying right now. I did notice though, Canadian banks did not recover as fast as the other stocks. So maybe there's still a buying opportunity in Canadian banks. So tomorrow after hours, Broadcom has earnings. So I want to play this stock for sure in earnings. I might do a put credit spread on Broadcom like I normally do, like 30 days. The straddle is trading at around $16, I think, when I last checked. Yeah, so 310, yeah, around $15-16. So I would probably try to go $16 away from the current market price. So it's at 310 right now, so I would probably sell a put spread at around maybe 295, maybe, yeah. 295 and 290, but this is actually the same week expiration, so this is one day away. This could be good because it'll die quickly. The premiums will drop really fast the next day because it's got a same day expiration. So if I'm impatient, I could do this trade, but if I want to play it safe, just to give myself time in the trade in case it goes against me, I could go for the 30 days. But I would have to see first what the 30-day straddle is trading at to give me the expected move. So the straddle for the July 2nd expiration is trading at about 30 points. So if I do the put credit spread at July 2nd, I would go 30 points lower. So I'd go to 280 strike and 275 for protection. And I would probably collect around 80 cents, 90 cents. And yeah, so I haven't decided yet, but I guess these are my two options for earnings trade on Broadcom. Alright, so if you have any questions, leave them in the comment section below. And like always, if you can open an account with Questrade to trade on the stock market, use one of my referral codes below. One of them gives you up to $250 back, depending on your deposit. And the other one gives you $50 in free trades regardless of your deposit. And you could just click on the link here if you want the $50 in free trades. And if you enjoyed this video, please click the like button, share with a friend, and subscribe to the channel. Thanks for watching.